So the banking battlefield's in a really interesting place. This is the proverbial David and Goliath. We've got the Goliath of the big incumbent organizations on one side with all of the customers and all of the budget. And we have the fintech players on the other side with scaling aspirations, scaling operations, and maybe plummeting valuations. Arguably, the challenge for many credit unions is they sit in the middle.
Imagine a financial institution where you're not just a customer, but a member and an owner. Welcome to the world of credit unions, where your needs come first and your community thrives. These institutions have been around for hundreds of years, but in the modern world, they find themselves stuck between the fast-moving fintechs and the deep-pocketed banks.
I think historically people have kind of looked at credit unions as a relatively poor cousin of the larger banking society. A lot of credit unions, actually they served the relatively unbanked part of the population, so they would probably be focusing on those areas that weren't necessarily as profitable. You know, a large bank, if you can't make much money out of them, they don't really want you as a customer, right? They'll make it hard. And I think this comes to the mutuality and the social good element of credit unions. They are there to help all parts of society.
According to the World Council of Credit Unions, there are more than 82,000 credit unions serving more than 400 million members across 98 countries. The United States and Canada are well known for having large numbers of credit unions. But there are also thousands of credit unions operating across the Caribbean and Latin America, and in countries as diverse as Ethiopia, Kenya, Nepal, Sri Lanka, and the Philippines. These credit unions offer a range of financial services, similar to those offered by banks, but with one big difference. Profits are reinvested back into the community and distributed among members. This means lower fees, better interest rates, and, often, a more personalised service.
Credit unions, to their credit, have a great level of trust from the community. And again, that comes from not just marketing campaigns, it comes from being visible, it comes from supporting local businesses and supporting local people. The commitment I have to you if I'm sitting in front of you is very different to the commitment I have when I'm just tapping some numbers into a mobile app on a Sunday afternoon and there's no recourse or no repercussions.
These community-oriented services can often be more effectively delivered by smaller, local institutions. Over time, this has encouraged the formation of many small, local credit unions. This trust and the direct relationships that credit unions have with their customers can only get them so far, because at the end of the day, they're still competing head-on with the deep pockets of the big banks and with the tech-savvy of the fintechs.
They sit in that space between, actually look at all the things that fintech has done with much smaller budgets and much smaller teams, and look at what the big incumbent banks haven't achieved with armies and armies of people and billions of investment. This really is the red pill, blue pill. It's the high or the low road decision, because at this stage, they have a real crossroads when it comes to who are they really fundamentally chasing on the banking battlefield.
These aren't the only challenges that credit unions face, because over the past 2 decades, the way in which all of us get information has completely changed.
The manifestation of trust, the manifestation of community is a fundamentally different thing in the world in which we operate. And this is really what credit unions are trying to come to terms with. In a world where most people are dealing with digital to manage their financial services, then is a branch network, is physicality, is physical people to talk to, is that a good enough differentiator in this space? And really somewhere between the two is probably what the real solution really is. If you go down that path of commoditizing yourself, moving to self-service channels, removing all of the human element from those interfaces and making a generic experience that is the same for everybody, that's not a good place to be. So for me, it is, do we want to make up for our problems? Definitely. But also we need to double down on our strengths. And the strengths is being part of a community, being visible in a community, and fundamentally serving that community as well as we possibly can do.
So what's preventing credit unions from providing better digital experiences for their members?
The problem that credit unions have is almost the fact they suffer from the imposter syndrome. They look at themselves, they see their small organisations, they look at the big banks, think, I don't have the money and the resources that the big banks do. But actually, weirdly, that's probably a good thing because they're not constrained by the historical technology legacy that the big banks have. I think the technological solutions they've had have been focused on providing, just generic banking capabilities. It's bland. What credit unions really need, indeed all banks probably need, but credit unions particularly, is a low-cost banking infrastructure that allows them to do storing money, moving money, lending money. But then that ability to basically tailor it above the line. But they haven't got the engineering team that allows to tailor them. So it's got to be something that really allows them to create product definitions and workflow capabilities that are tailored to their niche. And that's the key, is if you can do it cheaply, focused on a niche, actually they hit their USP perfectly.
Regulatory compliance costs for small credit unions can be up to 10 times higher per member than for larger institutions. To address challenges like these, credit unions are exploring approaches such as partnering with other credit unions. By collaborating and sharing infrastructure, they can achieve economies of scale that enhance their competitiveness. This cooperation can take the form of shared service centres, joint technology investments, and collective bargaining with vendors, enabling them to offer more competitive digital services to their members.
Credit unions don't understand how powerful they could be joined together, right? They know the power of the cooperative because of the members are showing that power. What about the cooperative of cooperatives? That joining together could be super powerful. And I think they need to make use of that superpower, which is their open collaborative nature, and drive that forward. A single credit union in and of themselves probably can't move the dial. A group of credit unions, or a cooperative of credit unions, I think can have a real impact in the world.
The challenge is timing. Credit unions, like many traditional banks, are starting to struggle to win and retain younger customers and entrepreneurs, often because their digital services simply aren't good enough to meet the expectations of younger, digitally savvy customers. Offering local branches and superb in-person service is great, but it's no longer sufficient. Fintechs and many established banks are rapidly developing stronger and stronger digital services for their customers, posing a real threat to credit unions and their prospects of winning younger customers and digital-savvy small businesses in particular. Credit unions are rapidly running out of time to stay relevant to their next generation of customers. The time to act is now.
Well, to be honest, they should have done it 5 years ago. So it's not, now's the right time, so it's now.
I think the time is absolutely now for credit unions because the pressures on both sides are increasing. We have the increased pressure from fintech players who are jumping into this market, who are serving the customers really, really effectively, but don't have the credibility that you have. Equally, on the other side of that, we have the big incumbent organizations who are outspending you and can outman you with the amount of people, with the amount of budgets that they have available.
Digital problems require digital solutions and digital thinking.
Banking infrastructure is increasingly getting commodified. If you can now wholesale these best-of-breed services and offer into these credit unions, the opportunity is now there. It definitely wasn't there 10, 15, 20 years ago. It probably wasn't there 5 years ago because the market was still solidifying. It's now, I think, at that point where we can execute.
These pressures a decade ago could have proven fatal for many credit unions. These pressures today, with the right opportunities, with the right communities, with the right brand, is a huge opportunity to just serve the customers in the way in which you've always wanted to do. If you only spend money in the way that money was spent before, their relative budgets are not going to get you very far. But actually, if you spend budgets in the way that you can do today, with the commoditization of cloud infrastructure or the new players coming to the market that offer banking as a service capabilities or even modern day core systems, the way in which you spend that money is fundamentally different to what you would have been doing 5 or 10 years ago. So for me, this is really the opportunity to course a new direction, a new strategy, not letting go of all of the things that have made you successful, not letting go of the purpose that actually drives you forward, but delivering it in a fundamentally different way. And that is scary for some organizations and that won't be right, but it is an exciting opportunity for many of the other ones as well.
What do we think? We think banking is 1% finished. Right? This is a classic example of the next 99%.